Hey Puppy Trades, I wanted to do a video analysis update on my favorite stocks for me, just me, to buy and hold for July 2021 and beyond. So, in this video, we're going to play the long game. I hope everyone had a great 4th of July weekend. Let's get right into it. So, I want to make it clear, I'm referring to the buy and hold strategy. I'm not telling you specifically as an individual to go buy and hold these stocks because I don't know who you are. I don't know how old you are. I don't know how much money you're investing with, and I don't know what your investment objectives are. And even if I did, I'm not qualified to give financial advice, but I am allowed to give my personal unprofessional opinion. So, what is the buy and hold strategy? The buy and hold strategy is a passive investment strategy in which an investor buys stocks or other types of securities such as ETFs and holds them for a long period, regardless of fluctuations in the market. An investor who uses a buy and hold strategy actively selects investments but has no concern for short-term price movements and technical indicators. Many legendary investors such as Warren Buffett and Jack Bogle praise the buy and hold approach as ideal for individuals seeking healthy long-term returns. So, I think it's important to understand with the buy and hold strategy, you are capitalizing on the gorgeous power of long-term compound interest, okay? If you talk to, anyone who has invested in Nvidia, Bitcoin, Peloton, Roku, any semiconductor stock, any big tech stock, they will tell you they have held through multiple 50% corrections to get to where they are now. And on the flip side, the value side of the market, there's probably nothing more powerful or important in investing than the compound interest and the compounding power of dividend stocks, reinvesting those dividends, not to mention the tax implications. So I think traders, let's make sure that while we're, trading the fluctuations in the market, that we're not neglecting our long-term exposure as well. So this is Berkshire Hathaway, ticker symbol BERKB. This isn't a long-term buy and hold in my opinion, but since we talked about Warren Buffett, I think it's another stock where you have to look at the entire stock market. You can't just stare at the S&P 500. Berkshire Hathaway in the short term is letting us know, it's probably going to be silly calling for a major top until at least this wave 5 plays out. So here's Berkshire Hathaway. It has a wave 1 from that election low, has a wave 2 correction, has a wave 3 impulse, and has an ABC correction to put in a wave 4 low. Between the 23.6 and the 38.2% retracement, Berkshire Hathaway, ticker symbol BERKB, I expect to go the length of wave 1, placed at the wave 4 low, to a conservative wave 5 target of 310. I believe 310 gets reached this quarter. I believe BERKB will hold above 272 with 366, that 38.2% retracement being a pretty important level to confirm this is a wave 4 low. So Berkshire Hathaway will go the length of wave 1, place at the wave 4 low, and head to 310. The stock market will probably not be crashing during that time. So that's Berkshire Hathaway. Here are kind of the longer term plays. Let's talk about Pfizer. I love Pfizer. It's starting to run off a little bit. We look at Pfizer right now. I'll talk about it in the short term. We'll look at the long term because I really like this whole sector. So this is Pfizer. I believe we have a wave 1, an ABC correction puts in a wave 2 low at the 61.8% retracement. We're going to see Pfizer break above this wave 1 high. And I believe what it's doing right now, it's formed the first leg of a bull flag. It's consolidating sideways. And then if we take the first leg of the bull flag, place it at this low, Pfizer's going to break out. It's going to go to around 45. I think aggressively 45 gets hit this quarter. And I think this wave 3 breakout is going to occur. I like Pfizer a lot, and I believe it's going to go to the median of the pitchfork as well as going to the bull flag equal legs target. Either way, all that matters is that we see Pfizer break above 43, confirm this is a wave 3 in progress. This was all consolidation. This was all basing. This is a wave 2 low we've put in at the 61.8% retracement. Pfizer is about to take off. We look at the longer term picture of Pfizer. It's even prettier than the shorter term. We have a wave 1, an ABC correction. We put in a wave 2 low. We have another wave 1 and another wave 2. If you take the length of this wave 1, you place it at the wave 2 low. Pfizer conservatively is going to go all the way to 60. That's pretty similar to what you get if you take the length of this wave 1 and place it at this wave 2 low. Pfizer's going to 60, 62, very conservatively. That's a conservative wave 3 target. We have a shallow wave 4 correction. We go on a 5th wave higher. I'm ultimately looking for Pfizer to be in the 90 range and pay a very nice dividend along the way. I think it's going to go to the median of this pitchfork as well. And, when we talk about trading stocks as a whole, I think the pharmaceuticals is one where a lot of, fundamental traders are going to be confused. They're going to think that all these pharmaceuticals are going to compete with each other. No, they're still in the same ETFs. Birds of a feather, they're going to flock together. If you're a Pfizer bull, you're rooting for AstraZeneca, you're rooting for Sanofi Aventis, you're rooting for Merck, which we'll look at right now. So this is Merck. Looks really pretty on the longer term view, almost identical to a Pfizer, right? So birds of a feather, they flock together. This is nearly identical to Pfizer, a large wave 1. We have an ABC correction. We put in a wave 2 low. The length of wave 1 placed at the wave 2 low. We'll take Merck to a very conservative wave 3 target of 109. On the smaller degree, we have a wave 1 and a wave 2. Where the length of wave 1 placed at this wave 2 low. We'll take Merck on a conservative wave 3 higher to 137. I think we really want to see Pfizer and Merck hold the March 2020 lows. For Merck, that's 65. I think Pfizer right now, we want to see it hold above 33. And then those are going to be, the levels to trade above, collect dividends along the way as we head to the median of this pitchfork. So Merck looks really good. Pfizer looks really good. I expect both of them to hold the 2020 March low, head to the median of the pitchfork, and pay a nice dividend along the way. So that's Pfizer. That's Merck. Here's AstraZeneca. I actually missed AstraZeneca. I got a little greedy. I was looking for this to kind of be an A, B, C correction, where if you took the length of wave A, you placed it at the wave B high, that I was going to get to buy AstraZeneca at about 42. So I was going for that 78.6%, retracement of wave 1. I didn't get it. AstraZeneca is going to run off on me. I had money set aside for it, and it's gone. So that's, what happens sometimes. Corrective waves in Elliott wave theory are not guaranteed to happen, but AstraZeneca and Pfizer both look like they put in wave 2 lows at that 61.8% retracement. AstraZeneca will go the length of wave 1, place the wave 2 low. Very conservatively, it's going to go to 75, have a shallow wave 4 correction, go on a 5th wave higher, but it's almost identical to Pfizer, where we put in a wave 2 low at the 61.8% retracement, and we're about to break that wave 1 high, confirm this was all consolidation, this was all basing, and now we're getting ready to go for AstraZeneca. I missed AstraZeneca, but I love seeing it do very well as a Pfizer bull. So I root for all the stocks in my sector. I don't think it's a competition. I think birds of a feather flock together. In supply chain, they say competition is the rising tide that lifts all boats. So anyway, here is Sanofi Aventis, French pharmaceutical giant. We talked about it a little bit. I think I talked about it in this range. We started to get a little bit of a reaction from, that 47 level. But anyway, if you're rooting for AstraZeneca, if you're rooting for Merck, you're rooting for Pfizer, you're also going to root for Sanofi Aventis, French pharma giant. Huge, gorgeous, just a gorgeous nest right here. Wave 1, ABC wave 2, wave 1, ABC wave 2. We're breaking out of another 20-year nest where we're going to go the length of wave 1, place at the wave 2 low. Conservatively, Sanofi Aventis, this value sector will go to 70. I'd be looking for, in the longer term view, that to be a conservative wave 3 target. We have a shallow wave 4 correction. We go on a 5th wave higher to 90. So I think Sanofi Aventis, AstraZeneca, Merck, Pfizer, they're all sending the message. Big pharma is going to be a sector to watch in the long term. Here's LTC Properties. Really a pure dividend play here. A lot of people think the real estate, the housing market is going to crash. I'm not saying it won't, but I think LTC Properties is, good evidence right now. That's going to be a little further away than a lot of people think. So here's LTC Properties. We have a wave 1 and a wave 2. We break above this wave 1 high. I believe this is a retirement home, type of stock. But anyway, it pays a 5% monthly dividend. This stock, definitely is going to keep paying dividends. But anyway, if we look at this wave 2 low, we want to see LTC, ticker symbol LTC Properties, not Litecoin, hold above 32. We're going to go to the 161.8% extension of wave 1, which is 55, have a shallow wave 4 correction, go on a 5th wave higher that I believe will be at least the length of wave 1, placed at the wave 4 low. So anyway, I've got LTC in the longer term cycles going to 65. I believe it will hold above 32 and pay a dividend along the way. So love LTC Properties. It's kind of a dividend play as well as a lot of these pharmaceutical stocks. Here is Procter & Gamble. I'm not sure that these are buy and holds, but I wanted to get kind of the consumer, the swing stocks in here. I think this whole sector this quarter, the value side of the market, the consumer side of the market, that consolidated for the past 2 quarters is going to break out. We saw Nike have a huge breakout above this 4th quarter high, but Procter & Gamble, large wave 1, cleanly subdivided into 1, 2, 3, 4, 5 waves. We have an A, B, C correction we put in a wave 2 low. We have another wave 1 and another wave 2. I believe Procter & Gamble will go the length of wave 1, place of the wave 2 low. I'm pretty aggressively looking for it to reach 174 in the second half of the year. Look for all this to be a huge nest. And I believe if Procter & Gamble is above 125 to 128 with the wave 2 low of 121 acting as invalidation, P&G will go the length of wave 1, place of the wave 2 low. It will go to the median of the pitchfork. It will reach 174. Very similar, almost identical count to Walmart right here. I think Walmart and Procter & Gamble, they're going to sneak up on some people. This sector is they've lured everyone to sleep. Reminds me of Nike, where you consolidate sideways for 2 quarters and then boom, right? What happened to Nike? It explodes. Large wave 1, cleanly subdivided into 1, 2, 3, 4, 5 waves. We have an ABC correction we put in a wave 2 low and that 50% retracement. Then I believe Walmart has another wave 1, another wave 2. So just like Procter & Gamble, I want to see a hold above 129 to 132. I want to see the wave 2 low of 126 act as invalidation. And if it does, Walmart and Procter & Gamble I expect will be in the 170s, pretty aggressively in the second half of the year. The length of wave 1, place of the wave 2 low. We'll take Walmart all the way to 178 for a conservative wave 3 target. Like I said, they may not be the best buy and hold opportunities, but they are consumer stocks, they are value stocks, and I think Nike secretly is actually a play on the rising price of cotton. I don't think it's a growth stock right here, but anyway, Walmart, Procter & Gamble, they're in the consumer side of the market. I think Nike is secretly a value stock, a play on the rising price of cotton. That's going to be a theme that we're about to get into. But this is a wave 1 and a wave 2. Wave 3, we put in this wave 3 high in the 4th quarter of 2020. Just like Procter & Gamble, just like Walmart, 4th quarter high, low in March, consolidation for 2 quarters, breakout. I think Procter & Gamble and Walmart, they're about to do the same thing. They put in the 4th quarter high. They put in the low in March. They consolidate sideways for 2 quarters. They're about to follow Nike in the consumer side of the market, break out above this wave 3 high, and take off. So this was a wave 1 and a wave 2, large wave 3, wave 4 at the 38.2% retracement, and then Nike is going on a 5th wave higher to pretty conservatively 169. That's looking really good to reach my target by September. Nike secretly a play on the rising cost of cotton. This is a really direct play on the rising cost of cotton. This is Unifi, ticker symbol UFI. We haven't talked about this yet, but really the whole theme, kind of the first half of this video is the idea that we're seeing, a commodity super cycle breakout, right? It's not just gold, it's not just silver, it's uranium, it's cotton, it's food, it's meat, right? It's oil. We talk about the long-term charts of Chevron a lot. These generational wave 2 lows that we put in. I would even throw the airlines in that group as well. But this is Unifi. I believe it goes on a large wave 1, very cleanly subdivided into 1, 2, 3, 4, 5 waves. So I think the max chart really the best view? Let's see. But yeah, I think the max chart is going to be our best view of Unifi right here. Maybe we can zoom in a little bit. But we have a wave 1, very cleanly subdivided into 1, 2, 3, 4, 5 waves. We have an A, B, C correction. We put in a wave 2 low in about May of 2020. And then I believe we're going on a larger degree, wave 3 higher, that will take Unifi, ticker symbol UFI, to 62 in the bigger picture. So I think the best invalidation level and the best stop level is actually going to come from the Ichimoku cloud on the, the 3-year chart. This looks really pretty right here. The Ichimoku cloud view on this weekly chart, I think it looks something like this, where from this low in March of 2020, we have a large wave 1. We have a 1, 2, 3, 4, 5, large degree wave 1, an ABC correction puts in a large degree wave 2. I want to make sure we know this is a pure play on cotton, right? This is a pure play on textiles. This is a textile stock. They make cotton, and this is a large wave 1. We have an ABC correction we put in a wave 2 low. This is like a huge breakout we're going to have. If we're above 20.72, if this Ichimoku cloud breakout on the 3-year chart with the weekly candles holds, you're going to see the red baseline act as that textbook Ichimoku cloud buying opportunity. It also looks like an ABC correction is ending. I believe we're going to go the length of wave 1, place it the wave 2 low. And we're going to see, in 2022, Unifi, ticker symbol UFI, goes on to reach 47. I want to see it hold above 20.72 for now. But this is a pure play on cotton, right? We talked about Nike just recently. It's not just gold. It's not just silver. It's all the commodities. We'll talk about uranium next. But Unifi, textile stock, looks like a 1, 2, 3, 4, 5, large degree wave 1, an A, B, C correction, large degree wave 2. If it holds above 20, it's on a large degree path right now to 62 for that larger degree wave 3 target. So that's a textile stock. Here is Credit Suisse. It's sort of another value stock. It's a regional bank. One of my favorites right now. I'm in this one. Has a beautiful large wave 1, an A, B, C, expanded flat. All an expanded flat is when a wave B makes a new high, right? That's why it's called an expanded flat. But I believe this is a wave C correction. We put in this large wave 2 low. I believe this is 20 years of consolidation right here. And it's kind of like the pharmaceuticals where we're seeing, the value side of the market break out of a 20-year base right now. The boomer side of the market is really about to do very well in the bigger picture. I believe this is a generational wave 2 low that we put in March of 2020. The only downside to this setup, I've mentioned this before, is that the invalidation level is all the way down at the March low of 6.47. Other than that, it's one of my favorites. We have a large wave 1, an A, B, C correction to put in a large wave 2. Now we're going on this large wave 3 higher. On the smaller degree, this might even be a swing. We've had extremely low implied volatility on Credit Suisse recently, but this is a wave 1 and a wave 2. Wave 3 will take it to 20. We have a shallow wave 4 correction. We go on a 5th wave higher. I believe in 2022, we'll see Credit Suisse hit that 20 to 25 target range. In the shorter term cycles, I'm more interested in it in the longer term cycles where we have a wave 1, an A, B, C correction to put in a wave 2 low. Now we're going on a wave 3 higher that will take Credit Suisse to at least 70, as crazy as that sounds in the longer term cycles. So I'm accumulating it. I want to see it hold above 6.47. And then I'm going to ride this all the way to 70 in the bigger picture. Love it as a value play. Here is Cameco Corp and Uranium Fuels. We're going to talk about Cameco Corp first. I'm not sure this is a great opportunity. We're going to probably need to see a dip in Uranium Fuels, but I think it's really important to make this point. It's not just gold and silver. It's a commodities super cycle breakout that we're seeing in bread, orange juice, chocolate, cotton, and of course gold and silver, and also uranium as well. Energy, even when we talk about the clean energy stocks, they may secretly be, a commodities play, and we just don't understand it yet. But this is a large wave 1 for Cameco Corp. This is one of the largest uranium producers in the world. Ticker symbol CCJ. We have an A, B, C correction. We put in a large wave 2 low. Cameco Corp will go the length of wave 1, place it the wave 2 low. It's going to go all the way to 59 for this conservative wave 3 target. It's going to go to the median of pitchfork. And this is looking really pretty. I love if you turn on the Ichimoku Cloud breakout, we get to, kind of have a objective mathematical indicator. Okay, this is a 20-year trend change, right? This is not just the wave theory opinion. This is a 15-year, downtrend we're seeing end impulsively with this Ichimoku Cloud breakout. So CCJ, Cameco Corp looks really good in the longer term view. We'll talk about uranium fuels in a second, how we might see a setup here, but this is a wave 1, an ABC correction puts in a wave 2 low, and then this uranium stock will go on a very conservative wave 3 above this wave 1 high to about 60. So we're looking at uranium stocks tripling. I think the best opportunity in the uranium sector may be coming from UUUU, ticker symbol is for Energy Fuels. This is an American uranium miner, but I believe this is a 1, 2, 3, 4, 5 large degree wave 1. We may be having an A, B, C correction right now. So, keyword may be, okay? In Elliott wave theory, corrections are not guaranteed to happen. You can only anticipate them, right? I was looking for AstraZeneca to fall to 42. I didn't get it, okay? But this I'm looking for right now, maybe an A, B, C correction. I got a half position on this dip below 5 here. I was hoping I would get more opportunities, but then we had this rally. So what I'm hoping for right now, and I really am just praying that this is a wave 1. We have an A, B, C correction. We put in I'm looking for a wave 2 buying opportunity. UUUU below 5, I think is a gift. We'll go the length of wave 1, place this wave 2 low. I want to see Energy Fuels act as a buying opportunity And then, the next, short-term wave 3 target would be 11. So the length of wave 1 placed at the wave 2 low would look like a very good buying opportunity to buy and ride to pretty conservatively 11 for a wave 3. I would actually be interested in playing it, a lot further than that. But if we got a dip, below 5 in this, 50% to 61.8% retracement zone, ticker symbol Energy Fuels would be a huge buying opportunity in my opinion. So, that just goes to show it's not just gold, it's not just silver. Let's look at gold and silver on the longer term charts. It's not like they haven't done anything, right? This is a large wave 1, and we have an A, B, C correction. We put in a wave 2 low. The length of wave 1 placed at the wave 2 low. We'll take gold, ticker symbol GLD, all the way on a path, to at least 244 for GLD. We're going to go from the lower bound of the pitchfork to the median of the pitchfork. If you look right here, nice little reaction on the median with this monthly wick. But I believe we've already broken above this wave, this October 2011 high, right? Wheat and precious metals has already broken above this high. There's a lot of evidence right now. This is going to be the exact same high that we're asking right now. Will silver break above this high, right? Well, we've already seen wheat and precious metals break above this high. We've already seen gold, GLD, break above this high. This is a wave 1 and a wave 2. GLD will go the length of wave 1, place at the wave 2 low, head to 244. In the shorter term cycles, I think GLD and SLV are going to act as pretty nice kind of invalidation levels for shorter term. The shorter term view, if we see GLD and SLV hold these lows right here, for GLD it's 157, which is exactly the 61.8% retracement. So I believe GLD forms a wave 1 during a 5-month rally from the March 2020 low. And this is only 5 months. And I believe right now we're completing a WXY 333. So, that's a lot of jargon. It's a little advanced. Normally I would just call this an ABC, but this is a textbook WXY correction. It's a correction. We have this connector X wave. The length of wave W placed at the wave X high is exactly where wave Y ends. So this is just a complex correction called a 333. But we know it's a 333. It has this textbook A, B, C kind of sideways connector wave for wave X. I believe this is a wave 1. We have a WXY correction ending at exactly the 61.8% retracement. So right now, if we're playing it tight, we want to see GLD hold above 157, confirm. That's the wave 2 low. If we're playing it wide, I think the 78.6% retracement would be a better invalidation level for a wave 2. All the way down here to 148. I don't want to see that broken, but I definitely don't even really want to see, this wave 2 low broken right here. I want to see that this is a 61.8% wave 2 low, and then this is a wave 1, a WXY correction, and now we're within another wave 1 and another wave 2. I want to see GLD start breaking out and go to the lower round of the pitchfork and then to the median of the pitchfork. GLD, the equal legs target, would be 215. This is only a 5-month rally. So a rally to 215 could be happening a lot quicker than people think. GLD, a lot of these miners, extremely low implied volatility. They've lured people to sleep. But I want to see 157 hold. I definitely want to see 148 hold. And GLD will go the length of wave 1, place of the wave 2 low. And GLD and SLV, they're really going to go and be the best kind of invalidation levels for a lot of these miners that we're going to talk about. So if we look at SLV, a really pretty chart right here. Important to note, we're asking right now, will this 2011 high be broken, right? Well, GLD has broken above this 2011 high. Wheat and precious metals has broken above this 2011 high. Okay, so this is a wave 1, an ABC correction puts in a wave 2 low. Reminds me a lot of Kamiko Court, large wave 1, the length of wave 1, place of the wave 2 low. We'll take SLV on a rally all the way to 50. I think we want to see SLV hold above 20 in the short term. The length of wave 1, place of the wave 2 low. We'll take SLV on a wave 3 higher to 50, and that would be the conservative wave 3 target. We have that, wave 4 correction that's sideways and shallow. We go on a 5th wave higher. To me, silver has cup and handle written all over it. It's looking really good. It reminds me a lot of platinum. Platinum is a pretty illiquid vehicle unless you're a futures trader. I think PPLT is really the only way to trade it. But if you're a precious metals bull, this is a lot of evidence right now. It's a wave 1, an ABC correction. We put in a wave 2 low. So this is the length of wave 1, places the wave 2 low. We're going to see platinum go all the way to 2,523. It's currently at 1,100, right? So we're talking about platinum more than doubling, right? Platinum is a rock, right? We're talking about platinum and silver, more than doubling. And that should be very scary for a lot of people who have a lot of money denominated in US dollars. But the length of wave 1 placed at the ABC wave 2 low, we'll see platinum, ticker symbol XPT USD, go to the length of wave 1 placed at the wave 2 low. Platinum, silver, they're both looking like they're going to double in the longer term cycles and go to about 2,500 for platinum. So it's not just gold and silver, it's platinum, it's uranium, it's cotton, it's food. Okay, so here is BTG Gold Corp, probably one of the best ways to play it, in my humble opinion. If we look at BTG Gold Corp, it looks like a triple nest to me. A wave 1, an ABC correction puts in a wave 2 low, another wave 1, another wave 2, another wave 1, another wave 2. So a triple nest right here. We're going to go to the length of wave 1, placed at the wave 2 low. We're at the 61.8% retracement, right? Everyone's falling asleep on the metals. We go to the length of wave 1, placed at the wave 2 low. B2G Gold Corp, not the cryptocurrency. BTG will go the length of wave 1, placed at the wave 2 low. For all these miners, I want to see silver SLV above 20. I want to see GLD above 157, 148 if we're playing it wide. But I think those levels hold, and these miners will do very well. BTG Gold Corp, the length of wave 1 placed at the wave 2 low, will take it to 9.45, right? That's double the current price. That's the conservative wave 3 target. We have a shallow wave 4 correction. We look for a fifth wave higher to 12.73. That's triple the current price. This is a company that mines rocks, okay? So BTG Gold Corp, looking for a huge reaction at the 61.8% retracement. Go to the length of wave 1, place at the wave 2 low. Next step. Next level up to the upside is a conservative wave 3 target of 9.45. We have a shallow wave 4 correction. We go on a fifth wave higher. So that's a small cap. Here's a large cap. This is a silver miner, Pan American Silver, PAAS. This might be one of the race horses right here. On the gold metal side of the market, we have a wave 1, an ABC correction puts in a wave 2 low. We have another wave 1 and another wave 2, right? We're asking right now, is Pan American Silver going to break above this high? Right? Well, wheat and precious metals already has, right? GLD already has. This is a wave 1, an ABC correction puts in a wave 2 low, another wave 1 and another wave 2. I believe right now we are within another wave 1 that is subdivided into 1, 2, 3, 4, 5 waves. I'm looking for Pan American Silver to reach the median of this pitchfork, by taking the length of wave 1, placing it at the wave 4 low for a pretty conservative wave 5 target. That would be a very conservative wave 5 target of 44. It would break above this high. We'd have a shallow wave 2 correction. The reason I think that wave 2 would end right here is because this is really going to be a conservative wave 5 target. But this is what I'm looking for right now. We're going to have a big wave 1, and then we have this wave 2, and then Pan American Silver just explodes higher. The length of wave 1 places that wave 2 low. I think wave 2 would end right there because this is really going to be a conservative fifth wave higher. But anyway, the length of wave 1 places the wave 2 low. Ultimately, we're going to see Pan American Silver go on a rally to 70. That'd be a conservative wave 3 target, right? So Pan American Silver, BTG Gold Corp, more than tripling. We're looking at platinum and silver more than doubling, right? It's all across the metals. It's all across the uranium market. It's all across the cotton market where we're seeing a commodities super cycle. So this is a wave 1 and a wave 2 for First Majestic Silver, ticker symbol AG. We go the length of wave 1, place of the wave 2 low. The next conservative wave 3 target on the larger degree for First Majestic Silver is 28. Huge nest right here. Wave 1. Right, 2011 high. Oh, is First Majestic Silver gonna break above this high? Right, wheat and precious metals already has. GLD gold already has. The length of wave 1 places this wave 2 low. Very conservatively, First Majestic Silver is going to 28. We have another wave 1 and another wave 2. We get this explosive reaction. We break above this wave 1 high. We confirm this was all basing. We're going to go from the lower bound of the pitchfork to the median of the pitchfork. We can see with our own eyes right now, when First Majestic Silver heads to the median of the pitchfork, it's going to be well into the 30s, okay? So it's all across the precious metal market. So I think AG looks really good. let's get into some sexy stocks, right? Those were value stocks. I hope you guys are awake. We're going to talk about some sexier stocks. So I want to say typically with a growth stock, I will take half the position size and really make sure I'm scaling in than I would for a value stock, because we have a higher beta, higher regular volatility, not implied volatility in the options market, but just higher general volatility for a growth stock. So they say, volatility is the price you pay for longer term gains. These are not for the faint of heart. So I normally take a half position size to scale in to the growth stocks. And then I'll decide, if we break down whether I want to add to that position. So this is MVIS, ticker symbol MVIS for Microvision. The fundamentals on this stock are pretty wild, well above my level of expertise. But this is a large wave one for MVIS Microvision. Very cleanly subdivided into 1, 2, 3, 4, 5 waves. We have an ABC correction. We put in a wave too low at the 61.8% retracement, right? So we break above this wave one high. We confirm this was all consolidation. We've broken above this wave one high. We put in another wave too low. Then we go on a wave one and a wave two. So I've measured this wave one rally. And right now, MVIS is between the 61.8 and 78.6% retracement. I believe we're going to get a monster wave three of wave three reaction right here. So I've got the stop level is this wave too low of 12.22. The invalidation level is this larger degree wave too low of 10.08. We hold above these levels. I like MVIS as a swing. I also like it as a long-term hold, because when we go to the length of wave one, place at the wave too low, MVIS is going to 32, and that's conservative, right? MVIS going to 32 is a conservative wave three target. For a higher beta stock like this, pretty likely wave three is going to blow past that. Then we would have a shallow wave four correction. We'd be looking for a fifth wave higher. There'd be at least the length of wave one. So I like it as a swing to 32. I like it as a long-term hold for much further beyond that. So MVIS, extremely low implied volatility. The implied volatility is in the dumpster right now. We know MVIS is going to have a large move. To me, the wave theory is very clear. That move is going to be to the upside. So I love Microvision. Gorgeous setup right there. Let's talk about some clean energy stocks, right? We talk about dirty energy, the uranium stocks. I think uranium's dirty energy. I don't know how, the environmentalists feel about that. But anyway, this is clean energy. First Solar, FSLR. I think, if you're interested in clean energy, then the First Solar chart is going to be pretty important to you. This is a wave one, an ABC correction we put in a wave too low. This is another wave one, another ABC correction we put in another wave too low. So this is about 8 to 9 years of nesting right here. 1, 2, 1, 2. We've broken above both of these wave one highs. We've confirmed all of this was consolidation. Now we're getting ready to explode, right? We're getting ready to absolutely explode to the upside for First Solar. The minimum wave three target is about 164. If we look at the shorter term count, it's almost identical to Tesla's count, honestly, but we have a wave one and a wave two. We have another wave one and another wave two. We don't break below the low of 59. So I think right now we're going to hold above 67. We're going to go the length of wave one, place at the wave too low, conservatively reach a very shallow wave three of 120. We'll have a short wave four correction, go on a fifth wave higher. And we can see right now in the current cycle how First Solar is heading to 60 in the longer term view. I mean, if you're a clean energy bull, this makes you salivate, right? Some other stocks that will make you salivate in the clean energy sector. I don't think First Solar, I don't think XPEV, I don't think Li Auto or Opportunities. I think they're evidence right now. So this is XPEV, wave one, ABC, wave too low. The length of wave one, place of the wave too low. We'll take XPEV conservatively to 80. I love when you turn on the Ichimoku Cloud breakout. Nothing wrong with having an objective indicator, right? This is probably, the best mathematical objective indicator that exists. If a trader, they didn't believe in wave theory, they had to pick some indicator to trade with passively, I think it would be the Ichimoku Cloud. This is really kind of the king of the indicators for momentum trading. We go on a huge wave one. We have an A, B, C correction. We put in a wave too low. And now this wave too low is really being confirmed with this huge Ichimoku Cloud breakout. We continue to build on this breakout and start, building up the confirmation that, yes, this is a huge trend change on the 1 year chart. And this is really helping confirm this wave too low is quote unquote the low. We'll go the length of wave one, place it the wave too low. XPEV is going to 80. We have, the cup and handle look all over right now, where we have a sideways wave 4 correction. We go on a 5th wave higher. We're very young into XPEV's cycle right now. So this is looking like a beauty. If we look at Li Auto as well, it's more confirmation. It's more confirmation when we look at Li Auto that this sector is going to do very well. The clean energy sector, we have a wave 1 for Li Auto. An ABC correction puts in a wave 2 low. Then boom, we got this explosive breakout right here. It's another one where you turn on the Ichimoku Cloud breakout, and it's really helping confirm with XPEV, right? The twin sisters, that this is the wave 2 low. We've broken above, this Ichimoku Cloud. We're building on this breakout, and this is the definition of impulsive, right? You're not going to call this a corrective wave, are you, bears? This is the length of wave 1, places the wave 2 low. We're going to go on a conservative wave 3 target to 49, reach that median of the pitchfork, and then it's another one where the cup and handle look, we can already see it from the wave 3 count. We break above the wave 1 high. We confirm all of this was basing, all this was consolidation. Wave theory is the only type of technical analysis that called this opportunity, right? All other classical traders are going to call this, unless you called this a falling wedge, you were calling this weakness. Wave theory was calling this opportunity. Li Auto will go the length of wave 1, place of the wave 2 low, break above this wave 1 high, confirm all of this was basing, and we're looking for a huge breakout for Li Auto and XPEV together. So as far as clean energy goes, I think the best opportunity right now is really polar power, looking really good in the clean energy. I think this has an EV side of it as well. I think it's involved in batteries. Don't quote me on the fundamentals. I'm a wave theory guy, but this is a 1, 2, 3, 4, 5 large degree wave 1, and ABC correction puts in a large degree wave 2. I believe polar power will hold above 7.97. It will go the length of wave 1, place of the wave 2 low, head to 37 as long as 7.97 holds. I think it's getting ready for a huge breakout, with the solar energy stocks. I think it holds above 7.97. I'm in polar power. I believe it will go the length of wave 1, place of the wave 2 low. It's going to reach 37, have a shallow wave 4 correction, and then go on a 5th wave higher into the 50s. So I love polar power. I think it holds above 7.97. I think it's heading to the 30s right here. So I took a half position with polar power. And there's a lot of upside from a percentage standpoint for polar power. So that's polar power. If we look at some of these other kind of sexier stocks in this sector, I think, crypto, it's really an opportunity right here. As far as the buy and holds go, crypto obviously extremely volatile, but I love the setup. So let's look at the, kind of the 5-year chart for Ethereum. So this is really what I'm seeing. This is a wave 1 and a wave 2. We've broken above this wave 1 high. And so we have this is either a wave 3 and a wave 4, or it's another wave 1 or another wave 2. Either way, I think for Ethereum, you're looking for a 5th wave higher, at least. Even if you call this a wave 3 or wave 4, it's incomplete, okay? If we look at Litecoin, we're going to see, I don't think that this is a 3 or a 4. I believe this is another wave 1 and another wave 2 that we're putting in at exactly the 61.8% retracement. So Litecoin's all the way down at the 78.6% retracement. If we're trading Ethereum and Litecoin just by themselves, we really want to see the 61.8% retracement is kind of the level we want to trade above, right? So we put in this low at 1709, pretty identical to the 61.8% retracement. I think that's the level we want to see hold if we're just trading Litecoin and Ethereum by themselves. This is a wave 1 and a wave 2. The length of wave 1, place of the wave 2 low, is going to take Ethereum all the way to 6,000 for a conservative wave 3 target, okay? That sounds crazy. It's not. It's the length of wave 1, place of the wave 2 low. We hold above 61.8% retracement of 1720. This low of 1709. There's a lot of reward to the upside for Ethereum, and the risk relative to the reward is very good. So this is a wave 1 and a wave 2. The length of wave 1, place of the wave 2 low. We'll take Ethereum to 6,000. We'll have a shallow wave 4 correction. We're looking for a 5th wave higher. The very conservative wave 4 would retest the wave 1 high, and we would see a 5th wave higher to 8,685. Okay, so if you're thinking just psychologically that there's even a chance in hell that Ethereum will be at the 6,000 to 8,000 range, you best believe they're going to get people off the bus before they go on that rally. I believe that's happening right now, right? Get off the bus. What they do for XPEV, what they do for Li Auto, they got retail off the bus before the huge rallies, okay? The higher beta stocks, they'll get you off the bus, and that's why the buy and hold strategy for some of these is going to be the better way to play it, okay? I know they don't all work out. I'm going to do some cleanup towards the end of the video on stocks that haven't worked out. But, you know, a lot of them do. Camping World, you know, you don't want to stay on this list, right? Camping World, Nokia, you know, Fastly, they didn't stay on the list long because they started doing very well, okay? So they don't all do well, but a lot of them have done very well, and we're still very early into a lot of those, you know, time projections for these videos that I've been making every month about my favorite, you know, long-term buy and hold. So this is Litecoin, large wave 1, large wave 2, then we have another wave 1 and another wave 2. So we have to ask, what is this? Is this a wave 3 or wave 4? Or is this another wave 1 or another wave 2? Well, first, let's look at the larger degree count. Large wave 1, ABC correction, large wave 2. We have a gorgeous reaction on the median of the pitchfork with this weekly candle, okay? Then we have another wave 1 and another wave 2. And then, you know, puppy trades, pitchforks don't work. Explosion to the lower bound of the pitchfork, okay? There's a ton of evidence. This is a valid pitchfork. And Litecoin will be heading to the median of this pitchfork, you know, for this larger degree wave 3 target, okay? We look at Litecoin right now, this is at the 78.6% retracement, okay? If you turn in your wave 3 homework and you say that this is a wave 3 and a wave 4 ending at the 78.6% retracement, you're probably gonna get an F, okay? This is the wave 2 low, and the length of wave 1 placed at the wave 2 low will take Litecoin on a conservative wave 3 target to 495, okay? It is at 140 right now. That is the conservative wave 3 target. We have a shallow wave 4 correction. We're going on a 5th wave higher to 801. Okay, what's that? A 600, 700% upside for Litecoin. You better believe they're gonna get you off the bus before that rally. And I think right now, Litecoin and Ripple, you know, especially Litecoin though, because it's broken above this wave 1 high, is a lot of evidence, you know, that this is a huge base. Okay, and this really is kind of the cup. And this isn't probably in the textbooks that this would be a handle, but, you know, but we've broken above this wave 1 high. Okay, I don't think this is a double top. I think this is another wave 1 and another wave 2. Now we're going on a massive wave 3 higher to 495. We want to see the 78.6% retracement of Litecoin hold above 105 to 107. Okay, so wave theorists, we're levels to levels traders just like everyone else, except we actually have price targets if the levels aren't broken. So that is Litecoin. Let's talk about some mining stocks. Here is, we're talking about Riot Blockchain because I think these mining stocks are a lot of evidence right now. If you look at the, you know, the bigger term view, you have to look at the mining stocks, especially for crypto, because we actually have a lot of intelligence from the options market. We talked about in my last video, Marathon Patent Group, all over the bar chart, straddle and strangle index. But anyway, Riot Blockchain, this is a 5-month rally. Okay, this is a 5-month rally from, you know, September to February for a large wave 1. We have an A, B, C correction. The length of wave A placed at the wave B high is where wave C, a la wave 2, ended between the 61.8 and the 78.6% retracement. So we want to see Riot Blockchain hold above 20. Yes, that seems wide. This is crypto. They have very high betas. And if we take the length of wave 1, place it the wave 2 low, Riot Blockchain will hold above 20, and it will go all the way to 98. Okay, so yes, if Riot Blockchain is going to go to 98, they're going to get you off the bus before that rally. Okay, so we see Riot Blockchain hold above 20, and we'll talk about Marathon Patent Group hold above 18. You know, that's going to be very important for all cryptocurrency people to watch. Okay, the length of wave 1, place at this wave 2 low, is going to take Riot Blockchain all the way to 98, so long as 20 holds. We're at the 61.8% retracement. We're getting this reaction right now. Riot Blockchain above 20, Marathon Patent Group above 18. You know, these are going to be things that crypto investors are really going to want to watch because you don't really have a lot of access to options market data for the cryptocurrency options on futures, okay? You do have them for Marathon Patent Group and Riot Blockchain. Huge wave 1, very cleanly subdivided into 1, 2, 3, 4, 5 waves. We have an A, B, C correction. We put in a wave 2 low at the 61.8% retracement. That's exactly where we wick. Okay, so if Marathon Patent Group is above 18.32, then the length of wave 1, placed at this wave 2 low, will take it on a huge wave 3 rally to 75. Okay, that's a conservative wave 3 target. We'll have a shallow wave 4 correction. We'll go on a 5th wave higher. So no, I don't think crypto's done. And I think the mining stocks, Ethereum, Litecoin, they're all kind of lining up for a monster monster rally. I'm talking about NXTD. This is literally a penny stock. This is extremely risky. I think it's, yes, I think it's a good opportunity. I also think it's an important part of the cryptocurrency equation. So this is NXTD, ticker symbol for Next ID. They have a few components of their business, but they are involved in the crypto mining. They move with the mining stocks. This is a 1, 2, 3, 4, 5 large degree wave 1. And ABC correction is putting in this large degree wave 2 at the 78.6% retracement. So if we're above 65 cents, I think this wave 2 low is in. NXTD will go to the length of wave 1, place of the wave 2 low. It will head all the way to 3.77. And it will go to the median of this pitchfork for a conservative wave 3 target. So 65 cents is the downside level that we want to hold above. If we're above that, I think we're very conservatively going to a median wave 3 target of about 3.77 for NXTD. These are some stocks that have not gone well. Their EBON, we're going to talk about. EBON hasn't gone well, but I don't think it's done. We have this IPO low that we've broken below. So a lot of people are going to say, well, Puppy Trace, how is EBON a wave 1 and an ABC correction wave 2 if we've broken above the IPO low? Well, you have to understand, when you're dealing with a stock that is very recently IPO'd as a wave theorist, you have to understand that they have been trading in private markets longer than they have been publicly listed. So what a lot of wave theorists will do, they will literally draw a line right here and they will say, this is really, wave 1 began at 0. Okay, so this is allowed. Neo broke below the IPO low before its monster rally last year. Okay, a new IPO stock, it's pretty common that you're gonna break below the IPO low. I don't think that is gonna be what you want to see to invalidate a wave 1. But anyway, EBON, I think this is an impulsive wave 1. Now we're having an A, B, C correction to put in a wave 2 low. The length of wave A, place of the wave B high, is where EBON is ending a wave 2 right now. We want to see EBON hold above 2.37. If it does, when we get this huge rally in crypto, I believe EBON will hold above 2.37. And it's going to go above this wave 1 high. So EBON, it hasn't gone well. I'm still holding it. Might not be the prettiest setup, but I'm just doing some cleanup right here on some of the buy and holds that have not gone well. I think Lordstown Motors is another one. XPEV did really well, Li Auto did really well, and Lordstown Motors did not. Okay, so this is another example. We've broken below the IPO low, but I still think this is intact. We're having an A, B, C correction. The length of wave A, place of the wave B high, is where this wave C, wave 2 is ending. We're seeing a lot of opportunity across the EV sector, from plug power to fuel cell to many stocks. We're about to see Neo break above that wave 1 high of about 66. And I think that as we see the whole EV sector, and like EBON, as we see the whole crypto sector break out, that these stocks are going to recover. So this was a wave 1. We had an A, B, C correction. We put in a wave 2 low. I think we want to see Lordstown Motors, ticker symbol RIDE, hold above 6.69. That's going to be the wave 2 low. And when we see EV rally, Lordstown Motors, like EBON, is going to go above this wave 1 high, above 27. It's got some recovering to do, but I still think, it's live right now. If it holds above 6.69, I think it's got pretty good opportunity to the upside. EBON, Lordstown Motors, they're not the prettiest setups right now, but I'm still holding them. So I just wanted to update those because they haven't gone too well. A lot of stocks have gone well, so you don't really want to stay on this list for too long. But anyway, this is HUYA. We have a wave 1. We have an ABC correction. We put in a wave 2 low. I believe we have another wave 1 cleanly subdivided into 1, 2, 3, 4, 5 waves. We have an ABC correction. We put in this wave 2 low. And I believe right now, I actually added to my HUYA position down here at 14. This has about a 27% short interest. It has a days to cover of 7. So a pretty ridiculous short interest right now, where if you're a bear and HUYA pops, you don't really have a guarantee that you can cover and exit your position for 7 days. That's pretty ridiculous. Whenever you see a liquid stock get up to 30% short interest, that could be pretty explosive. We have an ABC correction right now. Another example of breaking below the IPO low. I think right now HUYA might be the best one that's still intact, where if it's above 11.78, then this is a wave 1 and a wave 2, another wave 1 and another wave 2. I added to my HUYA position down here, so I always take half positions with growth stocks, and then if we, break below my level, I kind of make the decision, do I want to add to that position or not? For Lordstown Motors, I chose not to add to the position. For HUYA, I did, so I added to it at 14 after initially making an entry at 25. Right now, I want to see this low of 11.78 hold. We go on a large wave 3 rally to 51. We have a shallow wave 4 correction and go on a 5th wave higher. I think this has, some Chinese internet potential right here. We've seen JD, Alibaba, and Wayfair act as really good opportunities in the past. I think HUYA has that potential written all over it, so I like the risk. As a growth stock, I like the idea of having exposure to China as well. Speaking of China, let's just talk about Alibaba and Wayfair. If we look at Alibaba right now, I think it looks something like this on the bigger degree, where we have a wave 1 and a wave 2. Then we have another 1, 2, 3, 4, 5, large degree wave 1. An ABC correction puts in a large degree wave 2 low at the 61.8% retracement. I think at Alibaba, if we're playing it tight, we'll hold above 204. Really for the longer term view, the 78.6% retracement of 184. We want to see hold, and then the length of wave 1, place of the wave 2 low. Ultimately, we'll take Alibaba all the way to 378 for a conservative wave 3 target. We have a shallow wave 4 correction, and I'm looking for a 5th wave higher for Alibaba all the way to 493. I think Alibaba looks pretty good as long as it's above 184, and even right now, we can probably trade against that low of 204 in the shorter term cycles. So that's Alibaba. Here is Wayfair. I think Wayfair is a lot of evidence. It's probably a good swing, to be honest. It's in a nice uptrend, but here is, kind of the big bird view. We have a wave 1 and a wave 2, right? Get off the bus, retail, and then boom, an explosive move higher. So this is either a wave 3 or a wave 4, or it's another wave 1 or another wave 2. So I've got it pretty conservatively counted right now as a wave 3 or a wave 4. My suspicion is that it's actually another wave 1 and another wave 2. But because we're at the 38.2% retracement, I counted it as a wave 3 or wave 4 for this video, because either way, I think the wave 5 target would be the length of wave 3, place of the wave 4 low. This is also a textbook ascending triangle pattern, so we have kind of the first leg of the bull flag, this flat horizontal top, and then we're seeing the support levels rise. So I think right now, if we see Wayfair above 265, then it will go the length of wave 3, place of the wave 4 low. It's going to have an explosive move higher to 552. So the Chinese breakout is all across the market, especially in the kind of e-commerce and the internet side of the market. That's another reason I like HUYA. And another reason I like EBON is because I think the whole sector is looking really good. Another reason I like Lordstown Motors still is because I still think EV, clean energy, is looking very good. And it might be worth it to do the dash for trash in that sector. But anyway, Wayfair, I want to see a hold above 265. The invalidation level is about 224 because that's the 38.2% retracement. I think we see the length of wave 3, place of the wave 4 low, take Wayfair on an explosive move higher to 552. I'm looking for this to be a monster in the second half of the year. I think Wayfair has consolidated and is another one. We talk about Alibaba, we talk about Baidu. Wayfair looking for an explosive move to the upside. I wanted to add some fun stocks now. I've gotten asked about these a lot. I think they're having pretty setups, okay? So this is AMC Theaters, okay? If you don't believe in, if you believe it's all fundamentals, watch. You're about to see, we're gonna hear about the Reddit traders again, okay? I promise you, we're about to hear about the Reddit traders again, okay? Just watch, okay? This is AMC Theaters, wave 1, wave 2, connect the beginning of wave 1 with the high of wave 1 and the low of wave 2. Pitchforks don't work. AMC Theaters was all over the bar chart, straddle and strangle screener during this time. I'm talking about it because it made another appearance recently, but man, it was all over this screener in this area. In that filter, the bar chart, straddle and strangle filter, you go to options, long straddle, long strangle, take a picture of it every day because it is filtering for open interest. So my filters for this, normally I want to see a stock above $15 to $20, but AMC Theaters was all over it. We have a wave 1 and a wave 2, and then pitchforks don't work, but it's all over the straddle and strangle screener. Explosive wave 3. Explosive wave 3. Look at that, to the median of this pitchfork. Look at these gorgeous reactions on the median of this pitchfork. Then we have an ABC wave 4 low, so that's why I have an orange right here. This wave 4 ended at exactly the 38.2% retracement of 46. And I believe right now, we are going to hold above 39 for AMC Theaters. That's a wave 4 low. This is a wave 1 and a wave 2. We're going to go on a wave 3 to 80.13 as long as we hold above 39. This probably isn't the best setup. It's definitely not a good option setup because if you go to the price overview, the IV percentile is 62%. Okay, so if you buy an option on AMC, the options market has told you you're a sucker. You're buying something with extremely high implied volatility. I just think this is fun because we're going to hear from the Reddit traders soon. I think it's going to be fun, to have this to come back and look at and say, oh, see, we predicted this, right? But this is a wave 1 and a wave 2, large wave 3, ABC correction wave 4 at the 38.2% retracement. We're going to hold above 39. This is wave 1 of wave 5. This is wave 2 of wave 5. Wave 3 of wave 5 will take AMC theaters to 80. I've been asked about this one, context logic. Don't know much about this, but I know about the wave theory. If we just zoom in, so I think this is kind of the all-time low of 7.53. We had a wave 1 and a wave 2, and then we break above this wave 1 high. So we confirm all of this was consolidation, all of this was basing. It kind of has that leading diagonal look, but we've broken above this wave 1 high. So from a wave theory standpoint, we're incomplete to the upside. So this is a pretty important concept to understand in wave theory, the idea of being incomplete. Basically, the idea is even if you were a bear on context logic and you said this was a wave A or wave B, you would still be looking for wave C to go at least the length of wave A placed at the wave B high. So either way, you have an equal legs target of 17.28 that has not been reached yet. And if you're a bull, you're going to say that's not a wave A, that's not a wave B. This is the wave 1 and a wave 2. And then wave 3's conservative target is 17.28. Anyway, I've been asked about this one. I think it's a pretty clean look. The options market, we don't even have data on the options market really. This is such a recent IPO. So, AMC and context logic, options would be pretty dangerous. But, I do think right now, 9.71, if context logic, ticker symbol WISH, holds above it, this is a 1, 2, 3, 4, 5, wave 1. An ABC correction has put in a wave 2 low at the 61.8% retracement of 11.80. So we can trade against 9.71, and then context logic is going to go to that minimum target for wave 3 of 17. And if we zoom out to that 38, the 61.8% extension is about 18.54. So anyway, I've been asked about AMC. I've been asked about context logic. I think they look pretty. So I just wanted to talk about those. But anyway, those are my personal favorite long-term picks for July 2021 and beyond.